What to do. Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Yes, we are on the radio, and it is great to have you with us on a Saturday morning. Thanks for carving out some time. Hopefully 2 hours exactly. That's what we promise you every Saturday. 2 hours of infotainment. And you're welcome to be a part of the show. It's toll free. If you have questions, comments, concerns in the world of real estate, pick up your phone. Dial 877-927-6969. Our producer extraordinaire, Jimothy, he'll pick up that line, get a little bit of information, and you'll be on the radio before you know it. Speaking of Jimothy, good morning to you, my friend. How are you today?
Very good. Thank you, Johnny. Good morning to you guys. Always a pleasure to be here with you.
And nice to have you as always. And yeah, that's right. I'm your boy, Johnny C., your air traffic control. Remember, FloridaTalkRealEstate.com. I'll keep feeding you that information as we make our way through. Let's get to the important stuff. Your starting lineup on a Saturday morning. Let's say good morning to Mike Rauch, the mortgage guy from the mortgage firm. Good morning, Michael.
Good morning, John. Good morning. I like that. We promised, I think you said we promised 2 hours.
We do, yeah.
And then you paused, and then you said of infotainment. So the promise is the 2 hours.
That's it.
The infotainment is
It's
questionable.
That's the hope part.
Yeah, the hope. We hope.
That's right. Yes. Yes.
Promise and hope.
We do guarantee that 2 hours.
2 hours
happen,
guaranteed.
Yeah. Even if something goes horribly wrong and we get kicked off the air, something Florida Talk Real Estate related will play.
Okay.
You
All
know?
right.
Yeah.
I thought you were going to say time goes on. You're going to get your 2 hours no matter what.
Yeah, no, it's going to happen.
Yeah.
It's going to happen.
Yeah.
Let's keep it around the horn here. Very nice to always have one of our favorite guests always. We missed him. I feel like it's been an eternity since we've seen him. It might just be me because I think I've been out like 2 of the last 5 weeks. But Ross Komarinetz with Brightway Insurance, Juno Beach is here. I don't know if your mic's working or not, though.
We'll find out right now.
You sound a little low in my head.
That's right.
Okay.
Could be me.
Sounds good on my end.
As long as Jimmy says you sound good, then that's all I care.
I need to hear a little bit more. What you been doing, Ross?
Well,
There we
I
go.
would like to say that whenever Johnny says starting lineup, I just think of that movie, The Program.
Oh, nice. I love that movie.
Starting defense, place at the table.
Yeah, that's the movie where a bunch of kids decided it's a great idea to mock that movie and lay down in the middle of the roads and die in horrific fashion.
Yeah,
Because
I mean,
it's a movie.
we wanted to do it.
Like
That came out right in my high school football days. So
Totally.
we wanted to do all that stuff.
I don't even remember that. Who was in that?
Nobody.
I don't know if there's a notable.
Really?
Omar Epps, I think, or no, the running back was that.
Okay,
Who
yeah,
was the running back? Was it Omar Epps?
I think
Was
you're
that
right.
his name?
I think you're right. Yeah, so there might be a couple of notables, but nothing that really pops. But that's a fun football movie. That's pretty fun. That's good.
I'm going to look it up.
That's a good callback right there. Nice to see you,
Program.
Ross.
Starting lineup.
Yeah, nice. Fantastic. Thanks for that. Makes me feel a little bit better. Always makes me feel a little bit better to say good morning to our fearless leader, too. I've been telling you for 11 plus years now that he runs a top producing Keller Williams team at Keller Williams Innovations. You'll find the Florida Home Pros team. You'll also find my guy, Jimmy D. It's Jim DePola. How you be, Jimmy D?
Hey, good, Johnny. Good morning, everybody. Happy South Florida. Beautiful day out today, isn't it?
It is.
Man, it was a little cloudy, but the sun was coming through over the waves and everything. It looked pretty cool today. I really enjoyed it. So I like the scenery in Florida. We're going to be talking about why Florida sucks when I'm moving. I think we're going to get to that today.
Well, that was quite a shift right there.
I'm not going anywhere.
Yeah.
But I'm going to tell you why it sucks and I'm out of here.
Yeah, exactly.
Ross is it loud now.
Yeah.
Right.
Okay, so back just real quick, Jim, on the program, I just looked it up. So I don't suppose any of you have ever heard of a little actor named Jimmy Kahn.
No.
Jimmy Kahn. Never heard of him?
Yeah, he was the coach.
He's a nobody?
That's a
He was
that's a
coach.
huge name. I don't remember him in the movie though.
Oh, he was the coach.
Yeah, I don't remember him.
Oh.
There wasn't a ton of like coach time. It was
It-
most players.
And it's Omar Epps. And
Okay.
then how about Halle Berry? Ever heard of her?
Halle Berry's in that?
Halle Berry.
No kidding.
No, that doesn't ing a bell.
Yeah,
Cheerleader?
She played Autumn Haley.
You know why I don't remember? She didn't get naked.
Yeah, wow.
No, I don't recall. It's been a minute since I've seen that movie. I remember like 2 or 3 scenes, one of which is them laying down in the middle of the divider in the road.
All right.
The quarterback also stands in front of a train.
That's right. That's right. It's coming back to me now.
Yeah,
Yeah, Halle Berry and James Caan. You know who
Yeah,
else is
that's
in it,
right.
Mike? James Caan.
That's right. Jimmy Kahn.
Wow,
Jimmy Kahn.
what a recall, John.
Thanks, Jim. Thank you.
Is Jimmy Kahn still
Nice.
alive right now? Do you know even if he's still alive or
I
not?
think James Caan's
Is he
alive.
still
I believe
alive?
so.
I know he's in his 80s.
Do you know
So-
what else he was in, Jim?
Oh, so many things. I mean, what is he? He was in the Vegas show. Remember the TV show Vegas? He was in that.
Midnight Run.
He was in. I know what you're waiting for, right?
The
we're
most
not
overrated-
going to say that. We're not going to
You're not
say
gonna
that
say the
movie.
first
I'm
one?
not going to say
Okay,
the
all right.
trilogy. Yeah, I'm not going to say the trilogy.
The most
Jeez.
overrated movie
Godfather
ever.
1, 2, and 3.
I was guessing the most overrated movie ever.
Yikes.
Godfather?
Oh, Godfather is grossly
way.
overrated.
I
Oh
don't
my
think
God,
so.
Johnny.
Gross.
It's
Oh
only-
my
that's one
God.
of my favorite movies ever.
Yeah,
Well,
I
that doesn't
know.
mean
It's
anything.
so
Don't ever
crazy.
confuse popular and good.
Johnny and
Ever.
I are usually on the same page with this stuff. You don't like The Godfather?
I think it is grossly overrated. I feel like people have to say they like it or they feel like they're like
Really?
outcasts. Yeah, that is
Have you ever
That's-
watched it?
yeah, they're pretty boring. That's
Oh my
really
God.
really poor.
Crazy.
Johnny,
I could watch those over and over again. It's never boring for me.
Oh,
Johnny, you're never going to be Robert in Siskel or Robert and Ebert or whatever, Roger and Ebert or whatever those guys were.
Siskel
Don't-
and Ebert.
That is not Siskel and Ebert.
Oh, I'm
not
sorry,
gonna
I
be
don't have
your-
a popular
That's not going to
take.
be your career.
Yeah, grossly overrated. Ross, what's your take?
I don't care either way.
Yeah.
Ross is the sane person. He's always the sanest person in the room.
I don't know about that.
At least that's the cover.
Yeah.
Right now, what we'd normally be doing is shout outs, but we don't really have shout outs today because 2 of the deals that were supposed to close this week did not close.
Paola.
So I thought that we would talk about why they didn't close because this is a real show about real estate. And maybe there's some teachable moments in there for other people. when
Wait,
they're
everything
thinking,
doesn't just go smoothly from start to finish on every transaction?
I'm not. Sometimes it doesn't. Sometimes I have to kick in the Jimmy D mode and I just say, I'm just going to jam it through. That's what I say all the time. I'm just going to jam it through. Just going to jam it through. So I think this is a really good thing to talk about because later when we get into the market, and we're going to be talking about that today, there's so much going on in the national economy that affects us locally. And the February real estate market report came out for February for South Florida. So we're going to talk about that today.
All right.
But it's a very topsy-turvy, choppy market, as we've been talking about. And people can get very emotional. And both these cases were supercharged emotional situations. So I'm going to not take too much time. I'm going to try to wrap it up pretty quick. But both of the cases, in a matter of 4 hours, we found out on Thursday, in a matter of 4 hours, 10 o'clock and 2 o'clock. Is that 4 hours? 10 o'clock, 2 o'clock?
Yeah.
Well,
Yeah.
Mhm.
First, I get the first phone call at 10 o'clock. Hey, you know that closing we're going to be doing on Monday? The buyer's agent tells me this. I'm the listing agent, right? We're not going to be closing on Monday because we have to do now a hard money loan because we can't get the conventional financing that we're supposed to do. And this is a retail buyer, not an investment deal. And I was like, what the heck? Okay, whatever. We'll
What type
jam
of
it
property
through.
was it? Is it a condo?
Single family home right around the corner from you on Royal Palm Beach Boulevard
Wow.
and Ponce de Leon.
You have to go hard money.
They had to go to hard money, right? So luckily I understand hard money very well. So even though that can make a lot of agents that don't understand hard money very nervous, I had to keep, everybody was freaked out. The buyer was freaked out because he really needed to move into this house. The sellers were freaked out. Their moving truck was 26-foot long moving truck going to Massachusetts, was already packed and engine humming basically. And then we found out that we're not going to be closing on time. And that really hurt the sellers because they needed the proceeds from the sale of the house to do other things in Massachusetts immediately. Now they didn't have the money that they had promised other people. And then the buyer had no place to live and he has a wife and a young infant child. And it got really crazy, right? So the way that we handled that case is the sellers obviously were very upset and concerned that they didn't want to be leaving here and moving to Massachusetts and not knowing if their house was really sold or not. Because we had when you do a hard money loan, most hard money lenders will not allow the person to buy the house in their name. So they have to put it into an LLC or a corporation. And luckily this buyer had a corporation set up already so they could use it. But it gets more complicated because the title company has to rip all the paperwork out, put in the new name of the corporation versus the regular buyer. the hard money lender has to go through the whole process that the conventional financing people did, because we already had the inspection, we had the appraisal. We're closing Monday, this coming Monday, and we find out Thursday not happening, right? So that was pretty stressful. I'm working with that. Then at 2:00, I get a call. We were supposed to close yesterday on a deal, intercoastal condo. Get a call from the buyer's agent. I'm sorry, we can't get the conventional financing. We're going to go ahead and do a hard money loan. And I'm
Another
like,
one.
yeah, 2 in 4 hours. Can you imagine? And these aren't investment deals. These are regular retail buyer deals. Buyer wants to buy the house and move in, right? Usually hard money. For people who don't know, let me talk about that. For people who don't know what hard money is a type of loan where a private person is giving you the money. Sometimes you have a mortgage officer involved as a in between the lender and the borrower, and sometimes you're going directly to the lender directly and going, "Hey Ross, can you give me the money?" And then Ross says, "Yeah, this is how much interest I want, and this is the points I want you to pay, and here are the terms of the loan." And usually it's interest only. So you're only paying on the loan for the interest, and the principal still stays there in full the whole time you're making the payments. And then when you pay the house off, the mortgage off, you've paid all the interest up to that point, but then you still have all the principal left to pay, right? And
And the loan to value is usually pretty low too, isn't it?
yeah, it's like 65 cents on the dollar. So just to make things simple, if it was $100,000 sale, they'll lend you 65,000, even though the house is worth 100,000, right?
So in like normal people terms, that means you got to put a big down payment, right? 35% down.
Versus the 20% which is,
which is what these both people were doing, was 20% down, right? With conventional financing. So now they had to come up with more money. That's scary because, on the listing side, are they really going to come up with the extra 15%, blah, blah, blah. So the second couple, when they find out that the buyer had to do hard money, Mary and Stan are a great couple. They're in their 80s. They've been in their condo for 34 years. They were moving back home to Canada, and they didn't want to come back, and they really wanted this taken care of because of their age, and they wanted, they were done with the condo. So they were very nervous yesterday when we went to the closing table. We went to the closing table anyway, even though we didn't know if we were going to close. Our side closed, and explained everything. And what was really nice at the end of the conversation, they saw me negotiate with the buyer in their dining room. I didn't leave to go home. I negotiated the deal when we found out it was hard money right there in front of them, right? Which I rarely ever do. And
what did you have to negotiate? Just an extension, or
no, it was more than an extension, because there was a lot of costs involved. Because to make things more complicated for Stan and Mary, they had to deal with FHFA. FHFA is a Foreign Investor Real Estate Property Tax Act, which means that whatever the purchase price is, they have to give the federal government immediately a certain amount of taxes on the sale of the home, even though they might not owe those taxes. And then they got to claw it back from the federal government after they pay them.
And
right?
It's a big number because it's a percentage of the
of the
sales
purchase price.
not the proceeds.
Exactly, Mike.
Percentages of the purchase price.
So
Crazy.
that's why it's more than just an extension, because the family was like, so what they had to do in order to get this loan, they had to raise the price by a certain amount of money and then get a credit back.
Is that because so when somebody's buying a home as a primary residence, there's some difference than if they're buying as investment. But when you switch to hard money loan, Johnny, those are non-owner occupied, non-homestead properties, right? These private money lenders don't want somebody claiming homestead protections if they don't pay the loan, if they have to foreclose on it. So that's why they force you to do the LLC or sign that you're not going to live there type of stuff. Yeah. So, and I think the one detail you miss on like Johnny might be like, well, why wouldn't you do a hard money loan in the first place? You get it done in a week. Well, guess what? It's like a 1, 2, or 3 year interest only payment with a big balloon at the end, meaning you got to refinance or pay it off in that term. And
the interest rate, they call it hard money for a reason, right? So back when I used to do hard money loans, when I flipped properties full time, I was paying 12 to 15% interest only.
Ooh.
Okay, now this family, I know one of the families is paying 9.75. That's a steal. 9.75 for hard money is a steal, right? So they're doing 9.75. But now this affects my seller in many, many different ways. Number one, they have a higher purchase price. And now they're paying taxes on money that they're not even keeping because it's being a credit back to the buyer, right? So that was a problem. The other problem was, of course, the quarterly payment for the condo fees were due on Tuesday or Wednesday, whatever April 1st is. Because my couple is older, they're just used to paying everything on time. I was like, if you're 2 days late for your condo fee, it's going to be closed out in the settlement charges. Don't worry about it. He didn't want to do that. And the quarterly payment is a significant amount of money. It's thousands of dollars. So he didn't really want to pay that out of his pocket. He also didn't want to pay the higher real estate commission because he wasn't getting any benefit of this higher number. So he didn't want to pay the extra real estate commission. So we had to figure out all this math. The doc stamps, Mike, for the taxes on the house is higher.
Is it?
Yeah, because when they sell the house, the documentary stamp tax, which is a sales tax for the county,
Yeah,
because you increased your price.
Yeah, sure.
Then your title insurance policy goes up.
Yep.
So all these little figures now, they only add up to hundreds of dollars, not thousands. Most of it, except for the FHA bill, most of it's just hundreds of dollars, but it's very inconvenient. And the title company has to rip everything out, change everything, smack it all back
And your
together.
goal is for the sellers to walk away with the same amount of money. So because the financing changed, all of this stuff had to change in order for them to get the same proceeds they expected under the original terms of the deal.
Yes, and to make it more complicated, the buyer was very difficult with us during the inspection, and that was the worst inspection negotiation I've been through in a long time. And I felt like we were weak and we didn't know what to do about it. So we went ahead and caved in with what they wanted because the family really needed to move back to Canada because of their age. And so we got really beat up during the inspection. Now they're coming back to us 2 days before we're supposed to close and go, hey, by the way, our loan's no good. And now we're going to do this kind of loan. And they knew for weeks that there was a problem, never came to talk to us about it.
If they didn't have to close and they were completely fine, what
recourse?
Yeah.
Well, they had I guess I could talk about this. They had a $25,000 escrow deposit, a significant escrow deposit in the thing. So technically, this is why the family, my sellers, got so upset. Okay, they were upset about the negotiation. They still had bitterness about that on the inspection. Now they're being asked to do this huge favor, big inconvenience, and they wanted it, and they were afraid now that the buyer wasn't going to be able to afford to buy the house. They really didn't think it was going to close. So they said, well, we want the escrow deposit. And I explained to them that in the real world, even though that you're probably legally able to get that escrow deposit, that doesn't mean they're just going to keel over, the buyer's going to keel over and sign a document signing away $25,000 of their money. They're going to fight for it, even though they don't have a leg to stand on. And that's very hard, very difficult for people to understand. Well, what are the laws for? And why does the contract say what it says if I can't just get the money automatically when they breach that part of the contract? So, of course, we sent it out to Paul Krasker, the law office of Paulie Krasker, to ask him, thank you, Paul, to ask him what was going on with that. And Paul wrote the one word, the most important word that Paul wrote in the response back.
Retainer.
He wrote, he wrote, technically, the sellers are able to recoup the escrow deposit, but he wrote technically, right? And because I know in the real world what it's like. Mike, you know of a case that one of your buddies is negotiating right now. We have $100,000 escrow deposit dispute from a case that we did back in December.
Sure.
And it's still ongoing. $100,000 just sitting in the escrow. Buyer isn't getting it, seller isn't getting it because they're fighting over the money.
And normally the goal there on the buy side, like to make it super painful and complicated for them to try to take your money, right? You feel like, no, I can't, I didn't get my loan approved. That's not my fault. Well, technically you had a certain amount of time to get your loan approved, and then therefore your earnest money becomes kind of at risk. But the idea on the buy side, Jim, is to tie up the property too, so that you can't go and sell the property. So if you really want my money, Johnny, we're going to fight for it. It's going to be a long, drawn out fight. And in the meantime, you can't sell that property.
Yeah,
that's kind of like the goal on the buy side. Sometimes you can get around that and not. But yeah, it's very painful on both sides.
So we had to do a tough negotiation. So they were ready to walk away from the deal. They were ready to move back to Canada, which they didn't want to do without the house being sold, and let me sell the house while they were gone. But they didn't really want to do that. They were very uncomfortable. They haven't bought or sold a home in 50 years. God bless this family, right? So we decided that we were going to go after the escrow deposit. So we told them yesterday that if they signed it Thursday, when we found out the problem, if you sign a release, that you're going to release the $25,000 tomorrow, the day we were supposed to close, meaning yesterday, Friday, right? If you release the escrow deposit right now, even though you haven't closed, and give us all the money right now, we'll stay in contract and we'll give you 10 days to fix the mess. That way I felt like if they don't close, the sellers already have the money in their bank account. And
so instead of having to fight
really,
for it, you say, we're going to give you more time, but you now are guaranteed you're not going to fight us for that earnest money. We're going to keep it.
and that's what we did. And they got the money in the bank yesterday. So they got
awesome.
the $25,000 yesterday. And I had to, they watched me call the buyer's agent on the other side. And then they watched me craft the email to try to get what we wanted, because I don't just, the worst thing you do is like beat a person up who's already freaked out that they're going to lose $25,000 possibly if they can't close.
Yeah.
So everybody now is in fear zone, right? The buyer's in a panic zone. The seller's in a panic zone. Actually, the other agent had no idea what was going on. They had never done with a hard money loan before, and they didn't know anything that they needed to do about it. So right away, Nancy goes in, my office manager, checks to make sure the company's legit and that it's active and they can buy it in that company. Company's inactive in Florida. Well, we found out that they reopened the company in Wyoming a couple of years ago. So it was an active company in Wyoming. So we were able to get all this stuff done, but the sellers were so angry and they wanted their pound of flesh, from everything. And I was like, you got to keep your eye on the goal. The goal is you need to close. They need to buy. You need to sell. We want to do this as fast as possible. We got to keep calm. Even if they're not calm, we got to keep calm, because the calm person is going to have the best chance to get the best results. So they trusted me. And at the end, and this is making me smile right now, I got a little goosebumps. Mary turned to me yesterday when they got the money. We went to the closing table and she looked at me, God bless her, and she said, Jim, I'm so happy that I hired you, and watching you yesterday, I understand now how difficult your job is. And she goes, you did so well negotiating that. She goes, because I would have destroyed the whole thing, because she was the one that was so angry.
Can you imagine if you were like a for sale by owner in that scenario? Like,
yeah,
it's just, people will tend to get, when things go wrong, especially if it's last minute things, people will get adversarial. Jim just said they wanted their pound of flesh, right? Because they're upset. They're like, why aren't you performing? We're doing everything on our end. Matter of fact, you beat us up a little bit during the process, and now you can't even close.
Right.
So you got to have somebody there who's like, Jim said, keep your eye on the goal or eye on the ball. Like, you got to get to the finish line.
You do.
Doesn't it make the most sense to close this thing for you guys, for them, for everybody?
That's what you're trying to do.
Yeah.
And thankfully for both sides, Jim was in the position that he was, because as you said, the other representation was lost, never dealing with any of this. You need people that are great at what they do in your corner when you're making, the biggest purchase you're ever going to make, biggest sale you're ever going to make. You can have results like Stan and Mary. You can have somebody like Jim DePola in your corner. Go to floridatalkrealestate.com. You can see the hotline there, 888-973-7828. Here's a new click-through option. You can reserve time on Jim's calendar.
We call it Chat with Jim.
Chat with Jim.
Chat with Jim.
Hell, you can even, if you're on YouTube, if you're on Facebook streaming with us, you can put in your unique situation there. Someone's going to get back to you. But always remember, Florida Talk Real Estate is .com, your one-stop real estate shop. Access to the entire team. And if you want some results like Stan and Mary are going through right now, hopefully we'll have a shout out next week. Go ahead and get you some. FloridaTalkRealEstate.com.
Wait, for Chat and Jim, is it Zoom with like a fire in the background and he's got a steaming hot cup of coffee?
I hope so.
Or maybe a brandy.
Well, that hopefully will be coming soon, because we're trying to I'm trying to set up a podcast studio where I'm going to be like having a little studio. So when I do these talking to people, maybe I'll have a funny background and stuff like that. Anybody watching today on Facebook or YouTube, we're trying to get a little better with our cameras and our lighting. We're still tweaking everything, but you should check it out. I was looking at our YouTube channel. wait. Oh, I want to say the wrong number. I think we have 393. Is that possible? Yeah, we have about 393 shows in our podcast library.
Nice.
Can you imagine?
Just on YouTube?
Yeah, on our YouTube. No, actually of course, on the FloridaTalkRealEstate.com. Thank you, Johnny. But can you imagine that? I can't even imagine we've done over 400,
Well, what's
I know we've
52
done more than
times 11, Johnny?
Yeah.
Well,
we've had some weeks we're out. Yeah, we've had some weeks we're out.
572. All right.
Yeah. So we have I think we have over 500 hours of
74.
podcasts in there. Oh, and the other, Johnny's still calculating.
572.
Yeah,
572. Yeah.
My head
Also,
hurts.
also on our YouTube channel, Florida Talk Real Estate LLC, we have a lot of smaller videos out now, and you guys should go check them out.
Shorter, you mean?
Short, yeah. What did I say? Smaller. Yeah. They're
really
just
tiny.
really tiny.
You
They're
gotta
very
zoom
tiny.
in. Zoom in.
When you look at your camera, it's only like it looks like a.
I've seen those
It looks
MLS
like a
photos.
stamp. Yeah. Oh yeah, I know. It drives you crazy, right? So go ahead and check out our YouTube channel. It's becoming more robust all the time. We're putting out these little we call them chunk videos right now, but we're putting them out. So go ahead and check that out. And anybody checking out the YouTube channel, if you click on the more for each show, there's actually a timestamp of the different topics we talked about over the 2 hours. So if you're, let's say you're a buyer and you just want to know what's going on with the interest rates or buyer tips from Mike. Like today, we're going to talk about FHA financing for condos. Okay. So if you want to find out about that, you don't have to watch the whole 2 hours or listen to the whole 2 hours. You just go right in there, zero in, hit the subject you want, and check it out. So
Sweet.
We're getting a little more robust all the time. Just want to give shout outs to all our internet people. AJ from Touchstone Real Estate Services, our great appraiser. He's said, morning, gentlemen, Elizabeth, Francis, Mom, thank you so much for checking in. And I'll talk to you after the show. AJ came out with the report just before the February report came out, right? Because AJ's been doing weekly reports since December about what's happening in the Palm Beach County market. And now the February report came out almost the same time that he came out with his report. So we're going to talk a little bit about what's happening with that because it's pretty big news. I tell you what, let's go ahead. I know we're like 3 minutes early. Are we 3 minutes early right now?
Break whenever you want.
Okay, let's go ahead and
take.
take the break now. And on the flip side, we're going to start getting into this market, guys. Look, if you're thinking about buying or selling, if you're thinking about investing right now, which in my opinion, there's a lot of good opportunities for investors right now, especially fix and flips. I've seen a lot of deals, even on the MLS for that. You got to check out what we're going to be talking about next, because this is going to help you find out how to win your way through this crazy real estate market, because it's pretty choppy out there right now.
So Jim was talking about the YouTube page, Florida Talk Real Estate on YouTube and Facebook. Lots to be consumed, lots to be had. And always remember, Florida Talk Real Estate is a .com, your one-stop real estate shop. You'll find the hotline there. You can call it 24 hours a day, 7 days a week. It's 888-973-7828. FloridaTalkRealEstate.com. Know it, use it, love it, and share it. Of course, if you want to be a part of the program, we are live on a Saturday, and we are live until 11 when we pass the baton to the locker room. You can call right now. It's a quick 4-minute break. If you got a question, comment, concern, Jimothy will line you up, 877-927-6969. Of course, if you're not comfortable on the radio, I totally get it. Reach out on Facebook, YouTube, or at FloridaTalkRealEstate.com. 4 minutes from now, we're back at it. Great to have you with us every Saturday. Florida Talk Real Estate, right here. It's Real Radio.
Got something to say? I got something to say. Text us at 47142. Start your message with Real Radio. Standard data and message rates apply, and don't text while driving.
For more information about contests on the station, visit realradio921.com/rules.
From the Gordon and Partners Weather Center. Have you or a loved one been injured through no fault of your own? Call 561-333-3333 or go to fortheinjured.com.
I'm meteorologist Lauren Oleski for CBS 12 News. It's going to be a hot and humid day on this Saturday. Skies are mostly clear through the afternoon, but temperatures are near 90 degrees, above average for this time of year, and it could feel like the mid-90s with the humidity. We might get an inland shower late in the day and closer to the evening. We're above average again on Sunday, back near 90 for the highs tomorrow. tomorrow.
This report is sponsored by Audible. Find everything you love listening to on Audible. Hear celebrity memoirs, mysteries, true crime, sci-fi, and more. Audible is the home of storytelling, audiobooks, podcasts, and originals. Sign up for a free 30-day trial at audible.com.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
This is Real Radio 92.1 and 101.7. Real talk for the Palm Beaches and the Treasure Coast. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
You dial that up, Jimothy's going to line you up, get you on the air. Questions, comments, concerns in the world of real estate, something we're talking about. Don't be shy. Of course, I'm your boy, Johnny C, Air Traffic Control. Jimothy is our producer extraordinaire. How are you, my friend?
Doing mighty fine. Good morning, gentlemen.
And thank you for being with us. Maybe you're listening on the old terrestrial radio. That's fantastic. If you're streaming with us, it's one of two options on a Saturday. Florida Talk Real Estate on Facebook or Florida Talk Real Estate LLC on YouTube, home of a ton of informational videos. And again, we stream live on a Saturday. And always remember, Florida Talk Real Estate is .com, your one-stop real estate shop. Say good morning to Mike Rauch, the mortgage guy from the mortgage firm, joining us on a Saturday. Hello, Michael.
Good morning. Hi.
Nice to have you with us. Always great to have Ross Komarinetz with Brightway Insurance, Juno Beach. How are you, Ross?
I'm well. Juno, that's right.
Juno, and you know that Jimmy D's with us, too. That's our fearless leader for 11 plus years now. Been telling you he runs a top producing Keller Williams team. At Keller Williams Innovations, you find the Florida Home Pros team. Jimmy D, how you be?
Hey, I'm doing good, guys. Thank you so much. Happy South Florida, everybody. Got a good show cooking here, and we got a lot of news to get through because this segment's going to be about the economy and the local real estate market, and we have a lot of news came out this week, guys. We had Fed Reserve made actions. Mortgage rates changed a little bit. We're going to talk about that. We also want to talk about what actually happened down here in February in the South Florida market over the 6 counties we cover. So we're going to get into all of that. But let's start off first with a little bit of good news because not everything we're going to be talking about is going to be all roses and unicorns. So first thing I want to start off with
rainbows and unicorns.
Mike, when you were going to, well, I call it roses, rainbow, unicorns, champagne and unicorns, whatever, rainbows. But I wanted to start off, Mike. A couple weeks ago, we did I don't know actually who made the announcement, but they changed the PMI.
Yes.
For FHA mortgages.
What it was
right?
like, I mean, that's the best news anybody has heard in the mortgage world in a long time, right? So
yes.
FHA reduced their monthly mortgage insurance premium
from
0.85 to 0.55. So
more than a quarter point.
It's basically you just got a quarter point reduction in your rate.
And what happens if? Well, first of all, just set the foundation of what PMI is. Okay.
Okay. So, oh, jeez. Sorry.
Wow.
My computer.
Got excited, huh?
Yeah. It's exciting news. So when you do a low down payment loan, less than 20% on conventional and then FHA anytime, but essentially the lender needs to be protected. And so they're against default, right? So if you, the homeowner, stop paying your bills, there's an insurance policy that the lender can get repaid at least some portion of the principal balance on the loan. Okay. So it's an insurance policy, protects the lenders, but the consumer pays for it. The homeowner pays for it. And the reason you pay for it is because you're buying a home with a low down payment. So FHA essentially is a mortgage insurance company, right? They say, hey, and their mandate is home ownership. So they're saying, hey, we want to get people into homes. We want to allow them to do it with a very low down payment, 3.5%. It's almost the lowest game in town.
Mm-hmm.
But we do require mortgage insurance. We will insure that loan, but the homeowner pays for it. And they do that with an upfront fee and then also a monthly fee. That monthly fee is expressed as a percentage. For a long time, it has been 0.85%. So, Johnny, in real world terms, if you had a 6% 30-year fixed rate and your MI is 0.85, you're essentially paying 6.85% on your loan. That's kind of how you should think about that. So they reduced that monthly from 0.85 to 0.55. So that's over a quarter point reduction instant. Any buyer who's doing that. And that went into effect essentially beginning of March.
Is it retroactive or is it every loan moving forward?
Only loans written. Technically, it's loans that are delivered to FHA sometime in March.
Gotcha.
So, I was wondering about that. I was going to ask the same thing. It would have been so great if they dropped everybody a quarter point.
Yeah.
You know?
Yeah. Nice. So essentially FHA at some point, they fill their coffers with these mortgage insurance. And of course, the more years that go by and default rates are down, they're building up a pretty good war chest. And so finally, and this is kind of a long time coming, a lot of the lenders' mindset is that, okay, you guys have collected enough. Now we can reduce, let's ease the burden on the homeowners. So it was really great news with rising interest rates. It's basically an instant drop.
So that gives purchasing power, it boosts purchasing power by 2.5%.
I was going to say it's about 3%. I was going to say 3%, Jim. So if we have the old every 1% increase or decrease in the interest rate gives you about 10% buying power, or you lose 10% buying power. And so this is a 0.3, right? Not 1%, but 0.3%. And so it's about a 3% boost in your buying power. Or if you buy the same home, you're basically paying, 0.3 less on your monthly payment.
So,
which is real dollars.
It is.
So that's really great news. And it also just shows that this is very important because people don't think of the connections. And Mike just brought it up. Thank you, Mike. Why did they do this? They did this because there's so little default rates right now. People are making their mortgage payments. So everybody that keeps talking about the crash, right? That everybody's talking about all the time. Where? We're going to get into more reports, but just because you feel like there should be a crash doesn't mean the crash is here. Now, maybe it's coming. I'm not saying it's not, because when we get into the Fed stuff, I have a scary thing I read about banks. about bank failures. Okay,
Oh,
Johnny's
they
gonna
rule the
love this
world?
one. Oh my God! Yeah, exactly.
Beyonce
Right.
said girls rule the world.
I thought if I ruled the world. Oh, that was Beyonce.
Beyonce said girls
Banks
rule the world. Yeah,
She
it's
might be.
banks.
She
It's
might be
banks.
thinking on a deeper level.
Well, maybe
Gotcha.
it's girls who own banks rule the world.
Yeah, probably.
Maybe it's
Yeah.
the girls who own the
That's-
banks.
it's
rules
a pretty
the
tight
world.
subset, I think.
But everybody wants to rule.
Everybody.
I heard
wants
that too. Yeah, that's true.
So this is really good news. It's just another indicator that the housing market's pretty strong. You don't think that FHA is going to start dropping the PMI if they feel in the future we're going to have big problems, right? I mean, we're all talking about government, so you never know if they're going to do the right thing.
Yeah.
But
I was thinking back the last time FHA did this, they bumped it down and then they put it right back up. I forget
Yeah,
what the
happen.
circumstances were, but it maybe through some legal action or something, it was reduced, and then it was like they're like, no, never mind. That's we're not ready for that. They went right back up. So.
It might be the cynic in me, and I am very open and honest about how cynical I am. I feel like they're like, let's just do it because there's not a volume of FHA loans right now. They're like, let's do it. It's not a big deal because they're not moving a bunch of units right now at these price points.
No, but they are. I mean,
Are they in FHA?
Yeah, of course, Johnny. I mean, FHA is always a popular product because FHA has some advantages over conventional. Number one, like you can do a low down payment conventional, so that's not it. But if your credit is on like the lower side, you don't get penalized like you do on the conventional rates and mortgage. Like conventional mortgage insurance is also affected by your credit score. So if FHA is 0.55, and because of your credit, your conventional MI would be something like 1.2. I mean, that's a big difference.
It is.
That's a big difference. So FHA is there. They also same income, same debt. You qualify for a little bit higher payment on an FHA loan than you do on. So you have more buying power with an FHA loan. So the combination of interest rate being, not so much credit dependent, MI not being credit dependent, and a little bit more buying power based on debt to income ratios and the low down payment, FHA is still a really popular product, especially when people are being priced out of the market.
So, and I am kind of coming from an admittedly very kind of ignorant perspective because I'm not in the game like you guys. So I don't see the transactions on the regular. I feel like just as a layman paying attention to you guys talk a week in and week out, I just feel like FHA has been priced out for 2 years now. Like they're just not getting.
I don't think so. I think it's always the same challenge. Like if you're a buyer and you're competing, Jim, with FHA versus conventional, there's still some stigma there. Like maybe the appraisals are harder, or there's property condition issues. And so as a listing agent, are you preferring a conventional loan over FHA? I would think that the seasoned agent doesn't really care, right? At the end of the day, is it going to close?
Well, that's one thing before you get to that, I've always, that's one thing that bugs me more than any is somebody taking conventional over FHA with this thinking that it's a better loan
or over VA. Like
they're
imagine
approved. That. Like the loan is good.
Yeah. As long as you have a right mortgage broker that approves them right, you shouldn't worry about it. Because I just had two deals on Thursday.
Yeah, and both of those were high down payment conventional loans that didn't go through. So what's going on there?
What's going on there?
Yeah, that was 20% down for both people. So
well, why are you doing 20 on a condo? That was what I was thinking. You meant 25.
I don't remember, Mike, to be honest with you. Maybe it was 25%. And the lady was like, even if I have to bring more money to the table, no problem. Then it was tough.
Yeah.
But so
really great news. Did you want to talk about like the dollars, like what it means?
If you want, yeah. So I figured out just a couple of days ago because I was trying to figure out for my customers. $5,000, Mike, is about $35 a month right now. Is what I figured out.
Okay.
Is that
that's about right? So I say it's about 30, 35 based depending on the interest rates.
Right. $35 for every 5,000 you'd borrow. Cause I'm trying to do that to people that are on very tight budget, like to squeeze every ounce out of the orange.
Sure.
So, what kind of like the numbers you're talking about?
Yeah. So like just on a monthly payment perspective. So if you were shopping, you had given some like 300,000, 400,000. So let's say you're doing a $400,000 loan amount.
Mm-hmm.
That change in the MI for FHA, you're saving $100 a month, payment A to payment B. So 0.85 to 0.55. You're not really saving it, but now it's 100 less than it was before they made the change, which equals in a year $1,200, right? So 100 times 12, whatever. So there's instant savings on the payment, or the reverse of that is you have more buying power. So you can get a little bit higher. And that's where we talk about that 3% increase. So if you were buying at $400,000 because you were maxed out, you now have $100 more. So you qualify for $2,300 a month instead of $2,200 a month. And so what does that get you? And it's about a 3% increase. So 400,000, 3%, for 12 grand, right? So now you can buy something at 412, 415 maybe, whereas you were capped out at 400 before.
That's substantial.
So it's substantial for people who are out there like shopping
and
pre-approved with an FHA loan.
And
it really,
tight.
it gave them a little bit of space.
Yeah,
there,
it gives them space. So there's a little breathing room that's really nice to see, because everybody's been squeezed so tough on the buyer side, especially at the lower price point. If you're under 400,000, very difficult. We have a lot of buyers, Mike, that we've trying to find houses for, and a lot of them were under 300,000. That makes it even tougher.
Yeah.
Because basically, if you're in Palm Beach County, Broward County, Dade County, under 300,000, you're really not getting single family. Now you're in condo world, which we're going to get into in a little bit, Mike.
Sure.
Because that makes it much more difficult to buy when you're trying to do that. So that's some good news. Now let's talk about a couple other big things. So
can I ask one question?
Sure.
Is this news? Does this kind of kick into gear people that were on the fence a little bit? Does this motivate them a little bit? FHA buyers, are you going to see a little uptick in some phone calls? Because if you're thinking, man, is this good news for me? You need to go to FloridaTalkRealEstate.com. You need to sit down with Mike Rauch and see if it is good news for you.
Certainly, if you've been shopping, like you're already pre-approved, you're doing an FHA loan, this definitely was a piece of good news for you. And so if you were getting frustrated with that process, another time to dig in. Like if you kind of stop paying attention to your drip emails with listings, now you can say, hey, wait a second, I got some good news here. I might have increased my purchasing power. Update your pre-approval, right? If you're walking around with a 3-month-old pre-approval letter from your, whatever, your regular loan officer, right? You don't have a dynamic pre-approval or a fresh one. Get that updated, because your buying power, your position changed slightly. Now, before if you haven't talked to a loan originator, you probably don't know whether you're an FHA borrower or a conventional borrower. Like one of the questions when I'm doing the pre-approval is, what type of loan is going to work best for you? What's the one that makes the most sense? And sometimes it's based on down payment, sometimes it's based on credit, sometimes it's based on debt to income. But you might not know the answer, Johnny, until you talk to me, and I can tell you, hey, yeah, we're definitely FHA for this and this reason.
Well, and your perspective is often very different from mine, because I know conversations we've had where I'm really cash happy, and you're like, dude, save your money.
Yeah.
Why spend someone else's money? What are you doing? But that education goes a long, long way. Go to FloridaTalkRealEstate.com. Get with the best of the best. Pros, including Mike Rauch, the mortgage guy from the mortgage firm.
That's right. He's just one click away. FloridaTalkRealEstate.com or 888-973-7828. And we're live right now. So you have questions about the real estate market, all you got to do is just give us a call, 877-927-6969. Jimothy will pick up the phone. We'll answer any questions you have. We love that. We'll stop the show for your questions. So give us a call. Let's go into the Fed stuff. So we had that bank failure that happened, SVB, Silicon Valley Bank.
Yeah.
I'm having a problem with the acronym. Then we had, I think, First Republic was a company that was a bank was in trouble, and there was a third one. I can't remember the other one.
Signature.
Thank you, Signature. And remember when it first came out, the first thing I said on the air was, they're saying this is a one-off situation. The banks are saying, all the economists are like, oh, don't worry about SVB. It's all techie people. They put too much money into this bank. It's self-contained. And I said, well, I hope that they're true. But, Bear Stearns, when it collapsed in 2008, they said the same exact thing. And then we lost 465 banks after that.
Yeah, a lot of talking heads have to kind of play it down. They're saying, oh, it's not, and I'm not even talking heads. I'm talking at the very top. At the very top. This is fine. It's an isolated incident. Nothing is structurally wrong with our banking industry.
Don't look behind the curtains.
Jet, do you remember the other one? So this is before Bear Stearns. It was the .com. Do you remember what that was? Remember what the outlier there was?
Oh, I know the .com crash, but I don't remember the outlier.
Enron?
Oh, yeah, Enron, the energy company. Yep.
Enron. It was like that fell pretty hard. And then wasn't that the beginning of the .com kind of bubble
right
bursting.
there, right there. Yeah,
Right there.
yeah.
So, so
I'm not saying that's the case.
So
here, by the
everybody
way.
was wondering. Everybody was. Oh, and then Credit Suisse. I always call it Credit Suisse because I'm American. But Credit Suisse, they also had their big problems now, right? So I learned a lot from reading about all this stuff today. So everybody was like, everybody knew that the Fed was going to raise rates before the bank thing. And then they were thinking, oh, this bank thing is so scary. Maybe they're just going to back off from a quarter point to half point increase this time. And then the Fed came in and they said, no, we're going to go ahead and do the quarter point increase. They said they're going to continue increasing because they really want to stamp down this whack-a-mole inflation. It's still not going up, but it's not going down as fast as they want.
Well, they need to stop spending too.
Yeah,
that's a big part of the
so
problem.
That might help.
Or at least printing, right?
You got to. You got to. If it's going to happen, you got to.
But here's the thing. So they raised the quarter point. We're going to get into the mortgage rates and did that affect the mortgage rates or not in just a little bit. But the other thing I learned about this is I didn't understand the connection when the Fed raises the rates for the bank-to-bank lending, that it tamps down the yields for the long-term bonds. And what these banks did in the layman's terms, what they did was, like SVB, they had so many tech people coming in and they just said, hey, we'll take your risky companies, give us your money. And they flushed that bank with money. They had so much money that they didn't know what to do with it. So what they decided to do, and a lot of banks did this, they took a large part of their money and put it into long-term bonds, right? The problem with doing that is you can't take the money out right away when you need it. It's not liquid anymore. So what SVB did, they saw that they didn't have enough money to pay all the stuff, their liabilities that they had. So they were trying to do the right thing from what I read.
They lost
so
a lot
far.
of money during the tech crash.
Yeah.
Or like the tech slowdown, like in the fall.
Well, that right. So they needed more money. They had the money. But it was sitting in the long-term bond. So what they decided to do is to make sure everybody was solvent. They went ahead and took money from the long-term bonds. It cost them about 8% penalty to do that. And once they made the announcement they did that, the whole thing just collapsed because everybody started yanking all their money out. Then as I'm reading more and more wonky stuff, I'm reading The Economist and Barron's and, I'm reading all this stuff. And what they're saying is as the bond yields go down, there's a lot of banks out there that could be at risk because they can't pull out the money without a penalty, and they might need it because of the changes that are happening in their whatever the bank's situation is. So then this is the scary part, guys. I read a report. I was reading a report. I think it was in The Economist, and then they had a link to a university study where all these university professors, economists got together, and they said, what would happen if the Fed keeps continuing to raise the rates? How many other banks will be able to sustain, and how many are probably going to go under, like SVB, if they keep raising the rates? So they did these calculations. So last time we lost 465 banks in the last crash. How many banks do they think would be vulnerable? This is supposed to be a one-off now, remember. Oh, don't worry, SVB, it's just a weird thing that happened with them.
Wait, how many we lose?
How many would be vulnerable to be lost?
No, but you said last time the banks, they closed shops or were absorbed or whatever?
Yeah.
Okay, so a similar number, 400 something.
I think it's around 300.
811.
There you go. 565. I'm joking. 195. So significant, right? Not as bad as the crash, but that's a lot of banks that could be vulnerable in this situation.
But the focus is on the rates. Isn't the real lump of the problem about people pulling money out?
Yeah.
That's what it's all about.
Well, because the banking system essentially is just built on trust anyway.
It's it.
Yeah, well, it's
not backed by anything.
Well, yeah, but they would have the money. From what I've been reading, they have the money to pay. If people want to start pulling their money back, they have the money. They had the money, but it was tied up, and they couldn't just say, "Oh, you want all your money back, Johnny? Here."
Yeah,
but that's every bank.
But it's not.
That's not just them.
I know a lot of the focus is on the rate. I don't think the rate's the lump of the problem. The lump of the problem is panic and people pulling their cash.
The way that the rate affects it is because they bought at they're getting 1% interest on this long term.
Sure.
And now those are paying 3%. So now that 1% is worth so much less.
But if we don't have a run on pulling cash, it's
right.
moot. It's not.
Yeah.
But it happened because they were cashing out, basically recovering, right? They were recovering assets at a loss, which made people scared. And they're like, what the heck? Why would they ever do that?
Right.
Why would they ever do that? And the only reason they're having to do that is because they had obligations that they couldn't meet because this money was tied up and they couldn't touch it.
Exactly.
So they had to touch it. They took a loss. And then did a
People
bank run
started
actually
panicking.
start? I don't know if a
Yeah,
bank run
the bank
started
run
on them.
started on
Yeah.
SVB. It did.
Yeah.
I don't know about the other ones, but for sure SVB, they had a run. And I don't think it was the hardest run ever, right? I think it was way worse. And well, actually, during COVID, there was kind of runs on the bank a lot of that. I remember, I think I called you, Mike, and we heard stuff. It was like, you might want to take money out of the bank because I don't know if it's going to be there.
But I mean, unless you have over 250, there's no reason to show up at the bank and say, give me my money.
Right. FDIC insured,
You know?
right?
Right.
And so you get a lot of people that don't even have 250 that are, and I mean, that's not a huge chunk of their.
Although didn't Yellen say there's like a couple of hundred? She's like, you're probably not going to be insured.
That's what I was going to say. If you knew your bank was starting, you're worried it was going to go insolvent, even though you had FDIC insurance, I'd be running the bank and taking my money out.
Don't say that.
Yeah, I would.
Wow.
I would. No,
There we
if I
go.
was worried, if I was worried about, because I don't trust the FDIC now.
Oh,
I don't trust.
You don't?
Well,
You should
then
trust them more.
Then your money shouldn't be in that.
They'll
bank.
just go in the back and
Yeah.
print the money for you. Don't worry about it.
Yeah, that might happen. That might happen, but I don't know. A lot of stuff happened in the last crash. They said they were going to do stuff and they didn't do it. So
It's funny. I talk to people a lot who have that mentality. They keep their money in the house. I'm like, oh, that's tough. That's hard for us to use that for this purchase. What are we going to do? He's like, yeah, I don't want to put it in the bank. I'm like, okay. Usually a little more old fashioned.
So we'd love to
So we
hear.
call that.
Maybe they're right.
So we'd love to hear how the economy is affecting you. Why don't you give us a call live? All you got to do is call 877-927-6969. Are you fully employed? I'm hearing a lot of people that are doing great. I got a call from a guy named Doug.
Yeah.
We helped Mike, you helped him out buy his house about 4 years ago. He bought it for $240. Somebody just offered him over $700,000 for the house.
Wow.
Yeah. A very unusual neighborhood. Don't want to get into too much of it. Doug is a big fan of the show and a big fan of using all of us. He's used us many times in the past. And
is that an offer he couldn't refuse?
I don't want to get into it too much, but he's in a very, very flush situation to do what he wants to do. So we'll see how that's going to go for him. But there's a lot of really good things happening in the market, and there's and then you have the people that are just trying to get into first-time home buyers that are really struggling. So this is just a very choppy market.
Yeah.
So if you have, if the economy is affecting your ways, we'd love to talk to you about that. So give us a call on the show. Now, so that's where the Fed is. That's where the banking situation is. Inflation is still rearing its ugly head at 6% and kind of holding there. I'm hearing that certain markets are starting to deflate a little bit, but nothing really to talk about. So how did this affect interest rates, right? So this is kind of interesting. The interest rates now are at 6.42 as of Thursday. We're using the Freddie Mac report. It was 6.6 the week before that. It was 6.73 the week before that. So we've had 2 weeks of going down. But what I did was in that report, Mike, it's kind of interesting. Remember, I've been saying choppy waters, right? So I looked at the chart. Check this out. So if we go back to January, hold on here. So if we go back to the first week of January, we were at, let me get my grannies on because I'm old. We were at 6.48% starting the year. Okay. Then we went down 1, 2, 3, 4. We went down 4 weeks in a row. Then we went, when we got down to 6.1, 4 weeks in a row, we got down to 6.09 from 6.48. So we lost about, we dropped about 0.4 during that time. Then we went up. So we went down for 4 weeks. Then we went up 1, 2, 3, 4, 5 weeks. Then we went up for 5 weeks, got up to 6.73. And now we're down for 2 weeks. So what we're seeing is down for 4 weeks, up for 5 weeks, down for 2 weeks. To me, that's choppy waters. We're all over the place. But 6.42 is better than 6.48 when we started the year. So, we're a quarter of the year way through.
Yeah, well, I think the unintuitive thing is, so the Fed, when was their announcement? That was Wednesday.
Mhm.
Wednesday, they basically said, hey, we don't care what's happening with the banks. Inflation is still here. We're going to quarter point. And guess what? We're probably going to do it again later on. And maybe again after that. And mortgage rates on Friday. So this report that Jim's talking about goes from Thursday to Thursday. By Friday, we were down even a little bit more, Jim. So Friday was, if you were considering locking in your loans, you were floating, whatever, you were like, I don't know what's going to happen. Of course, my advice to somebody is always like, just lock, especially if you get it. So I was telling people on Wednesday, hey, you should probably be thinking about locking. Thursday, hey, we got a little bit better. I don't know if you can see the future, whatever, but we're better today than we were yesterday. You might want to lock. And then Friday, I'm like, hey, we're even better. We're even better today. I don't know how long this is going to hold. And that's the truth. I don't know how long it's going to hold. It seems counterintuitive. The Fed bumped their rate. Mortgage rates actually came down a little bit. We were better on Friday than we were on Tuesday. What does next week hold? What is the long-term prognosis? Long-term, it has to follow the trend. It has to follow the Fed. The Fed is bumping. Our rates are just going to continue, either hold or get a little bit better, but there's going to be slight variation in between. So I don't know. It's if I were advising you, Johnny, lock your loan. We can't do it today.
I know that's the way you always think, though. You're not gambling with it. You're like, I'm gonna lock this. Well,
it's just like I don't have the crystal ball.
Right.
How many people would have told you Friday would have been better interest rates than Wednesday with the Fed doing their thing?
Actually, I thought that was going to happen. If you
Jim,
had talked
of
to
course,
me,
always knows.
no.
Yeah.
I'm not joking about this. I'm not trying to be like Mr. Know-it-all, but when I was thinking that if they raise the rates this time, only because of the banking thing, right? If they raise the rates this time, I'm wondering if it's not really going to affect right this second. There might be a shudder aftershock that's going to bump it up again. But I thought that we would go down. So when I saw the 642, I was like, wow, I was right. But I'm not the Swami anymore because we're in uncharted waters and they're very choppy. You don't know what's going to happen.
Well, the other thing is if you start getting into the mindset, well, okay, every time the Fed has a meeting and they announce a rate hike, boom, we're going to have a little bit of a dip. Go back, you're going to see that's not the case, right? Like sometimes it went down, sometimes it went up. I happen to think there's a lead up in the mortgage-backed securities world where they know, they're always predicting, right? 30 days, 45 days, 60 days out. What are the rates going to be? They're making their market movements based on that. And so they might have led up to this moment. And then when it's like, okay, yeah, they didn't do 3/8 of a point. They only did a quarter. Now we can slide off a little bit.
Hey, Johnny, let's go ahead and take a break. On the flip side, we're going to be talking to Ross. We're going to switch the segments. We're going to be talking to Ross about, my roof is too damn expensive.
Roof is too expensive.
My insurance because of my roof is too damn expensive. So we're going to talk a little bit about that because Ross says he's still getting questions, even though we've talked about this a couple of times. So we're going to do another teachable moment. And then we're going to talk about using FHA loans to buy condos. So Mike's going to give us the lowdown on that.
So if you have any insurance related questions, good opportunity to jump on right now. 877-927-6969. Jim with you line. Yep. We are going to do a quick 4-minute break. We get back to it. And of course, if you're not comfortable on the radio, always remember you can reach out to the entire team. Pros. You got them all. The one-stop real estate shop is FloridaTalkRealEstate.com. Know it, use it, love it, share it. You got the hotline there, 888-973-7828. Lots of ways to get in touch. You can reach out on Facebook and YouTube, Florida Talk Real Estate, but always remember, FloridaTalkRealEstate.com. Back 4 minutes from now. Great to have you with us every Saturday. Florida Talk Real Estate. We're right here on Real Radio.
Introducing the latest way to hear the greatest station in the world. Tell your smart device to play Real Radio 92.1 on iHeartRadio.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road declaring title that you can get the job done. Beware, not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorneys Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
That's 1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Download the free iHeartRadio app for all your music, radio, and podcasts. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Plenty of time for your phone calls with your questions, comments, concerns in the world of real estate. We're about to dive into some property insurance situations. You got a question? Pick up your phone, dial 877-927-6969. Jimothy, our producer extraordinaire, he'll line you up. We'll get you on the air. You make the call, we'll take that call. Of course, FloridaTalkRealEstate.com is the place to go if you're not comfortable reaching out on the radio. Always remember FloridaTalkRealEstate.com, your one-stop real estate shop. Jimothy, how are you, my friend?
I am well. How are you, Johnny?
I'm good,
Excellent.
all things considered. Thank you very much. If you're streaming, thank you. Facebook, YouTube, Florida Talk Real Estate. We stream live every Saturday when we are on the radio. Of course, tuning in on the old terrestrial radio, maybe on the free download, your iHeartRadio app. Thank you for making us a part of your Saturday. Us is, Jimmy, me, Johnny C. Mike Rouse with us, the mortgage guy from the mortgage firm. Hello, Mike.
Yes, sir. In the house. Good morning.
Ross Komarinetz is here, too, with Brightway Insurance, Juno Beach. What's up, Ross?
Not a whole lot. Good to see everybody.
And our fearless leader, Jim DePola, with the Florida Home Pros team at Keller Williams Innovations. Jimmy D, how you be?
Thank you, Johnny. I'm doing really, really good. Happy South Florida, everybody. I hope you're having a great morning on your weekend. We're going to be talking about roofs right now because we're in such a crisis with our insurance right now. They just signed a new law. Did DeSantis sign that that
the tort
reform thing? I think he signed it. So now homeowners, if they go after the insurance companies, they're going to have to pay their own insurance, their own attorney fees to go ahead and sue the insurance companies. And that also goes for health insurance too. It wasn't just houses. I was reading about it. I didn't understand that there was a lot of other industries where you're going to be paying your own attorney fees. We're going to see how that works. The health insurance companies bothering me more than anything else. Imagine if you're sick, you need treatment. They're not giving it to you. And now you got to go hire an attorney to fight the company to try to get
or just like medical malpractice in general. Probably pretty lucrative for, I get it for like lawyers. If they say, hey, listen, we can bring this suit and you don't have to pay anything. Right?
Yeah.
You can get that, but I wonder if they're fixing the housing thing, and then they're also like, "Hey, what about this medical stuff? Too?
Yeah.
Can we get in on that? Can we get in on that?"
But lawyers are going to pick up a suit where they know that there's no standing, right? I mean, so they're clearly grabbing these cases where they're like, "Oh, you're being wronged. I'm going to take a piece of it, but you're being wronged. I'll represent
they'll
you."
They'll throw everything at the wall to see what sticks.
True. I don't agree with what Johnny just said. I have a friend that's in a situation right now, and the attorney that's suing the person knows that there's no real claim there, but they also know that if they put up the front that they're going to take it all the way to court, it's going to be so expensive that the settlement, even though they probably aren't going to win, it's going to be so expensive to get there that it's smarter to cut your losses. I'm going to be honest with you. I just had a copyright infringement lawsuit against me for my website. For a page that was built 6 years ago, 52 people went to it. It wasn't even a popular page on our website. And
that was Jim's dating app.
After we put the photos up, the photographer, whoever it was, ended up copywriting the photos after we put the photos on our website. Never told us they copyrighted it, and then came and sued us for copyright infringement. It was crazy.
Yeah.
We were I felt like we could have won if we went in front of a trial, if we went in front of a jury and explained what happened, because we weren't doing anything. We didn't steal somebody's photos. Okay. But because they were copyrighted after the fact and we didn't have the copyright licensing, we were in trouble.
And so it was less costly for you to settle than to have the fight.
Way less costly. It was a difference between 5 figures and, way past 6 figures or, into the 6 figures.
But what if somebody said, "Hey, Jim, let's have this fight. We're going to have it for as long as it takes, and you're never going to have to pay a dime." Then you'd be like, "Yeah, I'll take the fight.
Right.
I'll take the fight. Why not?"
So these plaintiff attorneys know that even though they might be right, they can still win a settlement, right? So it's going to be crazy to see what happens, but they did change the tort reform. But let's get to the root. So one of the issues with insurance and insurance fraud for a long time has been roofs.
And just for people to piece that together, that's going to be beneficial potentially, right?
Yeah.
For future, it's going to be a few years, but for future homeowners for property insurance in Florida, that they're saying it's the litigation that's causing so much of the increase. So that should help, right?
Yeah, that should slow down, all those lawsuits and then having them hemorrhage cash. But it'll take a couple years to shake out and see what's going to happen.
Yeah. So and it could not work the way that they're expecting it to work. We have to go in there and see how the sausage is being made now that they created the new rules and see if it works. So it might not even work, but it probably will work. But how much collateral damage is going to be there in order to get what they want?
Like what are the real claimants, the legitimate claims losing? But I'll tell you, Jim, if you're you're in a neighborhood where there's door knocking campaigns saying, "Hey, can we inspect your roof?" If one of your questions to them is like, "What's this going to cost me?" and the answer is no longer nothing, right? The answer is now, well, listen, if they deny it and then we have to get a lawyer, then you're going to have to pay the lawyer fee. Guess what? People are going to be like, "Okay, no thanks.
Nope.
Yeah, I'm not interested." Right. So that it's going to change that aspect of it. But sure, it'll make it more difficult on the legitimate claims, people with legitimate damage.
One of the people on Facebook just said, "What about the Morgan & Morgan filing 25,000 lawsuits yesterday?" I don't even know what's going on with that.
So they were one of the biggest firms.
I know about
Morgan
& Morgan
in suing all the insurance companies.
Ah,
so they're one of the biggest ones. So it doesn't.
Oh, I remember. Okay, I did
So
read
they
about
probably
this.
tried to sneak all those in.
They did. That's what I read an article about, but I didn't catch the Morgan & Morgan. So yeah, so all the attorneys right now, they wanted to beat the deadline, and they just filed massive amount of lawsuits all at one time. So
man.
poor judges, poor taxpayers, because there's going to be a lot of stuff going on. The clerk of the courts all
Morgan
around
and
the
Morgan
area.
for the people.
Is it that's so blatant, but I guess they probably got the law on their side. What are you going to do?
Hey, the law's law, and they're just working
Exactly.
within the law. You
That's
know
it.
what I mean? And they changed the
I don't make the laws.
regulations.
All
Yep.
you could do is roll your eyes and laugh, though. That is amazing.
Yeah. Well, who knows how many of those are legitimate, though? A lot of them, there might be a lot of
There'll be some
legitimate
percentage.
complaints.
Yeah.
Well, getting back to the roofs. Okay. So, Ross, I heard again this week one of our customers say that insurance is so high because the roof is old and they're going to go ahead and replace it. But it's really not that simple, right? Can you explain how this whole thing works? Because that isn't the way it works in the real world, right?
Yeah. So right now, if your roof is put on after March of 2002, which right now most homes are, unless it's a tile roof, you're already getting a pretty good discount for that. So right now, most of the policies that we're writing are with Citizens. So while if you get a new roof, it may open up a few more carriers, but Citizens is still going to be $1,000 cheaper, unless the house is like a 2010 with a new roof. Because we quote every time we do a quote in the absence of a wind mitigation report, we're assuming the roof is 2018, so it's 5 years old, so that we get the most carriers back. 99% of the time it's Citizens, and Citizens doesn't care whether you have a 2003 roof or a 2022 roof. They're going to give you the same discount.
Interesting. I think, Ross, yesterday we got some quotes for people buying down in Broward, and I think it's a 2008 home. And it was the first time in a long time where they actually had options, right? There was like, you guys do, here's your Premier, here's the budget. And usually that's with Citizen, Premier budget with Citizen. This time they had I think Citizens and two other carriers who would insure their home. I was like, what's going on here? What is happening? But
dogs and cats living together.
but it's a good example of
how crazy it is right now.
The only thing that is going to make a difference is it might give you options other than Citizens.
Yeah, because you had a 2008 house. It's 15 years old.
Yeah.
So that's we're going to get more carriers that are going to offer.
It can't even drive
right
it.
there. But
yeah.
But most of the time, Citizens is still the best bet in those cases anyway. But I don't remember who this is for, so I don't remember if Citizens was the best one here.
I actually, I had that question, Jim, which is is Citizens that much more difficult to work with than any of the other insurers? And I was talking to somebody who does, a GC, right? Who do insurance work, whether it's water, mold, that type of stuff. And they said no. They're like, it's never painless, right? It's always kind of a painful process, and it's difficult to get the claim filled right at the numbers that you want. But they said Citizens isn't any worse than the rest as far as filing and that process is the same regardless of the insurer, which whatever makes sense. They try to.
Citizens has a bad rap, but really it's just pain for us to work with. Their requirements are strict, and they just require certain things that other companies don't. And the coverage, you can't make it better and you can't make it any worse. It is what it is, and that's pretty much what it is with Citizens. They're not like a horrible company to deal with.
I had a really good question for you. I had somebody call me up yesterday. They're thinking about moving down here. Her name is Maureen. She lives in New York. She wants to move somewhere in Florida, but she's looked everywhere. Naples, Citrus Hills, Boynton Beach, Vero Beach. I can't even remember a couple of the other areas. And her question was, if she buys down here, will the insurance policies be different if you're far away from the coast, like Central Florida, versus being on the coastal counties? And what I explained to her, tell me if I was right about this, if you were in Palm Beach, Broward, or Dade County, which I call ground zero for insurance, right? They always seem to pay higher for us. That whether you live on Singer Island or if you live in Palm Bay, you're still in that same cluster of that danger zone of that ground zero area. and you're going to pay the same increases for being in that hurricane zone. Is that true?
So kind of the further north you go,
Mm-hmm.
the cheaper it gets. The further west you go,
Mm-hmm.
the cheaper it gets. So you're kind of just moving in
So
that direction.
even in Palm Beach County, though, like if you were looking for insurance policy, let's say that you're west of 95, not east of US 1, or you're right on Lake Okeechobee, is there going to be a difference?
Yeah, it'll be much cheaper the
It
further
would.
west you go. Yeah.
Oh, I didn't know
Yeah.
that, even though you're in
Wow.
Palm Beach County.
Yeah.
Oh,
What
I
if
didn't
you go
know
all
that.
the, what if you go all the way west?
Yeah. What if I'm on the beach in Naples?
There is a point of diminishing return where it picks back up. But yeah, it's not just, okay, Palm Beach County gets charged these rates. It's very location specific.
I didn't know that.
Yeah, it's very location specific. So while Citizens might be the only company that's going to offer coverage on Singer Island, you know, you go 5 miles west, you may get like 5 other companies. And even Citizens to Citizens is going to be cheaper.
Wow.
Yeah.
Okay, that's good to know. I didn't know that.
Yeah.
Well, if you have an insurance question, why don't you pick up your phone, dial 877-927-6969. Jimothy will get you going. That's toll free. Got an insurance question? Hit us up right now. Of course, you can always contact off air as well at floridatalkrealestate.com. Leave a question, comment on Facebook or YouTube, but always remember floridatalkrealestate.com.
Thank you, Johnny. Hey, we're going to go into using FHA loans to buy a condo because a lot of first-time buyers, Mike, because they're on such a low budget, they start going on Zillow before they talk to the mortgage person, and they kind of have an idea of what their budget's going to be. They realize as going through all those crazy websites like Zillow, TrueYourRealtor.com, those kind of things, because they're doing it, you know, just by themselves without any professionals working with them. And they start looking and realize, oh, I'm not going to be able to buy a house. It's unaffordable for me, so I'm going to start looking at condos. But they haven't talked to a mortgage person yet,
Yeah.
right?
Yeah.
So then they come to me and they go, hey, I want to buy a condo. And they have very low down payment money, right? So they're thinking, oh, I'll just use VA financing or FHA financing, right? And I'm going to do that low down payment or no down payment and get the condo. Does it really work like that, Mike?
No.
Okay, so tell me.
Is that it? Should I expand?
I know, and I hate
expand.
I
please.
hate saying that. I hate
Yeah.
hearing that answer, but it's true, and I hate giving that news to people.
I'll just say this in general: if you are looking at condos, you really need to be on what is it? Mind your P's and Q's, Johnny. You got to know what's going on. Your lender has to know that you're doing that. Your real estate agent should know, because in general, FHA and condos don't play nice together. VA and condos don't play nice together.
Can you say why? Because people always ask me, what the heck is going on with that?
So, I think as a general rule, FHA has a list of approved condos, and you can search by county. If it's not on the list, you can't do an FHA loan, right? And that would apply for reverse mortgages too, which is another big one. Right. So if it's not on the approved list, you can't do the loan. If it's not on VA's approved list, you can't do the loan.
And the reason why they did that is during the last crisis we had when everybody went into foreclosure, that the condos got hit pretty
I think
bad.
default rates on condos
Were
were
higher.
higher than any other segment. And so FHA at that point in time, we're like, yeah, we're
Too
out.
risky.
We're not gonna insure, right? Remember their mortgage insurance, their insurance against default. We're not gonna mess around with condos in Florida.
Let's just hold that thought. We're going to get back to it. Let's go ahead and take the caller, Johnny.
Let's do
Is
that.
that right?
Who we
Okay.
got there, Jim?
All right, we have George on the line. You asked if people had insurance questions, and George is asking. George,
Nice.
welcome to Florida Talk Real Estate.
Thank you. Hey guys, good morning.
Good morning.
Hey, so I had an insurance company and they sent me a letter saying I'm going to have to redo my whole roof because of the age. Then I found Citizens and they took it on with no questions asked. And my question is, I mean, I guess every insurance company is different. Can you have an insurance company that, number one, that doesn't cover the roof, for instance, or I forgot my other question, but is that possible to have an insurance company that doesn't cover your roof?
The only time I typically see that is in the excess and surplus market, when we've got a really old roof that nobody else is going to do and we've got to go there. They will exclude the roof just because it's old, I've never tried to choose to exclude a roof. We might be able to, but typically that even excluding the roof on those excess and surplus policies, the rate's going to be 3 times probably what you'd pay with a regular carrier, assuming it was had a okay roof.
Yeah, I wouldn't recommend that neither. But I was just, I got scared because I had like less than 4 months to put a new roof on, and I'm like, oh my god.
Yeah. How old's your roof?
With $30,000. It's probably 12 years old.
Okay.
Maybe a little older.
Okay. They should have given you the option. Your current company should have given you the option to prove that you had 5 years of life left. But I'm sure you saved money by going to Citizens anyway.
Yeah, for sure. Yeah. I mean, and I didn't have to fix my roof right now.
Yeah, exactly. So there we go. We were just talking about, hey, you're being pressured to replace your roof, and you don't have to.
Right, exactly.
Yeah,
so here's a little tip for you, George. If they come back to you next year and say you need to replace your roof, you're going to do exactly what we just did this weekend with one of our customers. They're working with me as the realtor. They're working with Mike as the mortgage guy, and Ross as the insurance guy, right? And Trident Title is the title guy. So what we had to do is that we weren't sure if the roof needed to be replaced or not. So we used this company to do. Ross, I always forget. Is it just a useful life report, or is it called the 4-point? I know the 4 points for 30 years or older. So
right now, 20.
Yeah, 20. So if it's earlier than 20 years, do you just do the useful life report?
Right. Yeah. So the 4-point inspection, which encompasses a little bit more, will have that information on there. And then also you can just get a roof certification
roof certification. So what that does, George, is let's say that the company's saying that you need to replace your roof. If you get a roof certification and you have 3 years of useful life, Ross, right? 3 years of useful life
Citizen.
Or more, you're going to get a Citizens policy. You don't have to replace the roof. Then let's say the next year they come to you again. Let's say you only had 3 years left. Okay. So then you don't have to put your roof on. Now, the next year they say, hey, it's time to put the roof on. If you get another report that says you still have 3 years left, you don't have to put the roof on. Okay. And that report's only like $150.
Oh, yeah. Nice.
Yeah. Okay.
Somehow we just the opposite of like excluding the roof. We need an insurance company that just does the roof. So we can it's like a gap policy, right? Like your insurer won't do your roof. Here's this policy just for, can you do that and not lose your tail?
Doubt it.
I doubt it.
Yeah, probably not.
The carriers are starting to offer actual cash value coverage now. So
I always thought was hilarious.
Yeah, you can choose to get depreciated coverage on your roof.
Used value on the roof.
Yeah.
Do you think there's any benefit to that?
I haven't seen it yet.
It's mandatory if you have a loan.
Yeah. So if there's another party who has an interest in your home, a security interest, then yeah, they're going to require you to have insurance. If you don't have a mortgage, then it's optional.
Yeah. Roll the dice.
At your own risk.
That's
Sure.
right.
There's no law that says you have to insure your stuff.
Yeah.
Unless you're trying to drive it on the road.
Thank you very much.
Of course, George. Keep us in mind. Try to watch us every Saturday, and please like and share our page to let other people know about it. Okay.
Appreciate you being out there,
Thank
man.
you.
Have a good rest of your weekend.
It is kind of crazy. There's a comment here. Nick says it's crazy. A 12-year-old roof and he's getting dropped, and it is crazy. I mean, it's like, what was the roof made of?
Yeah,
rice paper? Or
he actually said that's fundamentally wrong, and he's right. I mean, I agree with you.
Yeah, I agree with you too.
Yeah, I agree with you. Yeah. So it's just the crazy market we're in right now. So if you have a roof issue, and it's either affecting your sale, your future sale, your purchase, or if you're just living in the house and you're dealing with your insurance company, we are your one-stop real estate shop for all that information. We have tons of information. We know all the ins and outs. If there's a way to give you an edge and try to get done what you want to done without a huge cost, we're there for you. So please don't forget floridatalkrealestate.com. So that's really important. So now, Mike, we were continuing with the FHA condo.
Yeah.
So what we were explaining is the risk. The reason why
FHA is not in the condo market, VA is not in the condo market as far as insuring those, is because there were huge defaults And that was a big segment. People stopped paying their mortgages, and so they lost their butts on
Mm-hmm.
those loans.
So with FHA, you normally put 3.5% down, or you
Yep.
put 3.5% down, and then with VA is 0% down. But
Yep.
when you go to conventional loan, if you buy a condo and you need financing, you're usually doing conventional. So what are the down payments for conventional usually for FHA?
Yeah, let me just, before we get off FHA. So I'm saying in general, if it's not on the list already,
Mm-hmm.
as an approved list, and there is a process for approving a condo project, right? So some people do take that on. If it's not on the list, it's hard. Now they also have, FHA has what they call a spot approval process, Johnny. So you can take an individual unit in a project, and instead of getting the whole project approved with FHA, you can do the individual unit. Now it's a very arduous process. A lot of condos aren't going to pass. A lot of individual units won't pass, but there is possibility if your lender knows what they're doing and you have the time to do it.
Okay.
So in general, if you're shopping for condos, you should be doing a conventional loan, right? Now, the question is, can you do that with a low down payment? Yes, you can. However, there's a process. Not only do you have to get approved for your loan, the condo project has to get approved. We have to review it, and there's two processes. There's a limited review and a full review. If you're doing less than 25% down, Jim, which is why I made that comment earlier, less than 25% down in your primary residence, you're going to do a full review on the condo, which means you got to know if the condo is going to pass as early as possible. You got to look at their budget, look at their financials, look at their insurance situation. There's a chance that they can't pass the full review, in which case you got to do 25% down or more.
Why do they review the condo?
Because of risk, right? So if
no,
you
I
have,
mean the association. Why do they review the association?
Because if the condo, I guess it's about default risk, right? So you're getting mortgage insurance. If the condo is not in good financial health and you're getting in with very little
down payment,
skin in the game, right? You're doing a 3% or 5% down. The chances of you walking away from that unit to foreclosure are higher than if you put more down payment.
Is it because of special assessments that you may not want to pay? Like they don't have that budgeted.
So one of the things they're looking at is reserve income. That's certainly one of the things. Like, is the condo project healthy enough that they are setting aside a savings account, right? Like a reserve account, not just to cover their expenses, but also to cover long-term capital expenses. And so if they're not doing a prudent budgeting, then Fannie Freddie are saying, no, well, you better put a big chunk down or we're not going to do this. So if you do 25% down, it's called a limited review. You still have to do some sort of level of review, but it's much less intrusive than the full review process. So one of the big things, number one, if you're buying condos, you should be a conventional loan most of the time. Number two, if you're doing a low down payment, and I say low, I'm talking anything less than 25% down, your lender really has to be on top of it before you get into contract. Jimmy, if you're out looking at condos, what do I tell you? I said, give me the budget. Like first thing, I need to see the budget because we're low down payment. If you're a listing agent and you have a condo listed and you're receiving offers, if you don't know if you can accept less than 25%, like you haven't done your job.
Nope.
You're getting into a contract with a 5% down conventional and you don't know if it's going to close. That's a problem.
Absolutely.
Huge problem.
Now, the other thing I wanted to ask on this subject, or just talk about on this subject, the other thing that's very confusing to a lot of consumers is it a condo or an HOA? So a lot of times when I'm doing searches on the MLS to look for townhomes specifically, the way you solve this problem, by the way, for buyers is you kind of steer away from condos and the next affordable kind of unit would be a townhome usually.
Yeah,
right?
or a villa.
A villa or a townhome, right? So when you do those kind of deals, it's much easier to use FHA financing. But here's the situation is when you go to search for townhomes or villas on the MLS, a lot of realtors don't put it down correctly. And you have to actually read the legal description to find out if the word condo is in there or not. And if it says condo, even though it's listed as a townhouse.
Or looks like a townhome.
Right. And it looks like 2 stories. You know, townhomes don't have to be 2 stories, but everybody thinks they are. So the 2-story townhomes, right? But it's really a condo because when you read the legal description, it says condo. You can't qualify for that house. In traditional FHA financing.
I learned that very early in my career as a mortgage professional. Look at the legal description. This is on the property appraisal, right? It's the actual legal description of the property. If you see the word condo in there or condominium, Johnny, I don't care what it looks like. I don't care even if it's completely detached. You are in a condo community, legally a condominium. You need to know that. So look at the legal description, condo.
So if you're thinking about buying a condo and you're like, I never heard about any of this stuff before, just give us a call. We'll be here to help you. Mike will walk you through the financing. Ross will walk you through the insurance, because we're going to talk about that kind of insurance in a little bit, because it's a little different than single family home insurance. And of course, we're here for you to help you find that unit that you want to buy.
FloridaTalkRealEstate.com. That's FloridaTalkRealEstate.com, your one-stop real estate shop.
I guess we're going to plow through. I had no idea it's 10:35. Okay, so it doesn't make sense to make the commercial. Is that okay with you, Jimothy?
Sure.
Okay, cool, man. So let's go into just a little bit of fun thing real quick. We're going to talk about SoFla, South Florida. I call it SoFla, is so ultra prime, right? And I thought this is kind of funny because there were two articles that came out last week. So one says Florida's Palm Beach real estate market becomes #1 real estate market in the country per capita. Okay. And then the same week, from the same company, the same news organization, came out, New York City remains the most expensive real estate market in the world.
Oh, make up your mind, huh?
Yeah, make up your mind. Is it going to be New York or Palm Beach? Which one is it? So anyway, I just thought that was kind of interesting. Palm Beach is on fire right now, and I mean fire in a good way if you're selling. And people want to buy in Palm Beach, and it's crazy. These ultra. I learned a lot about the definitions of these super mansions, right?
Oh, you're saying Palm Beach as in Palm Beach Island?
The island of Palm Beach, the town of Palm Beach. Okay. So what we found out is, first of all, the way that who was the one? This is coming from the New York Post, but the study isn't from the New York Post. They just wrote about the study, and I can't find the study right now. But I thought this was kind of interesting about what ultra prime and super prime sales are. Okay, I thought that was funny. We're at a point now where we just don't have luxury sales. Now we have super prime and ultra prime sales. I'm like, who knew, right? So super prime sales are known as anything over 10 million. Okay, if you're buying a house over 10 million, that's called super prime. Okay,
what's below 10 million? Prime?
I guess luxury.
Scrub.
I guess that would be luxury.
Peasant.
Yeah, slacker.
Peasant.
Slacker homes. Yeah, you're a loser, right? And then ultra prime is 25 million or more. Okay. So
Johnny's market.
New York had
Nice.
200. Last year, New York had 244 super prime sales, right? So the whole year, 244, 25 million or over. I'm sorry, I take that back. 244 units sold in New York City that were 10 million or more. Okay. But 25 million or more, it was 43. There were 43 homes, right? So where does that rank? Los Angeles is in that group, Hong Kong, Miami, Palm Beach, and Singapore, Geneva, Broward County. Oh, they have Palm Beach and Broward. Okay. So it's the two counties, Geneva, Sydney, and Paris, right? So we're right in the mix of all that ultra prime and super prime properties. So I thought that was kind of interesting. And then in the other article, they were talking about the sales over in Palm Beach. And it actually is kind of crazy right now. There's a mansion on the market that's $218 million in Palm Beach right now. The top 5 home $1 million listing sales in Palm Beach County were well over $10 million each. It's just kind of crazy. I think I saw something recently that John Bon Jovi just sold his, I'm getting confused, super prime property and then bought he sold his super prime property in Palm Beach, then
Ultra.
Moved down the street. No, I think it was just super. I don't
Okay.
think it was ultra. I don't think it was over 25 million. And then he bought 2 other properties, going to collate them. And then that's going to turn into a super prime property.
That'll be a super ultra. Super ultra.
Yeah, super ultra.
Once you
ultra.
put those
Yeah.
two together, it becomes super ultra.
And Rush Limbaugh's house just sold for Rush Linsbaugh's house just sold for $155 million.
Didn't you buy that because it had a podcast studio in it?
He
You
built
bought
the
it. You
I
bought
think
it,
he
right?
built the podcast studio in there.
Yeah. So
Oh, you mean the
you
new
bought
person?
it, right?
Oh yeah, I bought it. Yeah.
The
I really
EID.
wanted that studio. So anyway, I just thought that was kind of interesting that the New York Post can't decide if Palm Beach or New York City is the #1 most expensive market in the world.
I think
But,
most of us are worried about the 12-year-old roof issue more than super ultra prime,
Feels that way. Yes.
Because my plans to move into Geneva, I guess.
Well, I thought about getting a summer home over there, but just priced out. Just by a hair.
So Florida has so Florida has some competition now for people that are moving. You know how we've been talking forever now about the migration of people
Coming down to Florida.
All the mass massive amount of people coming into the state. Well, Floridians are the #1 group of people moving out of state to this one area, and the area is Vegas. And I thought that was kind of interesting. It's like, really, I didn't know that. Now, the numbers aren't startling. It isn't like we're having a mass exodus over to Vegas, but Floridians are the #1 group of people that are moving to Vegas right now.
More than Californians?
More than California.
Oh, because I know Nevada's bitching about all the Californians moving there.
Mm-hmm. Yeah. And let me see.
It's hot. They got a lot of air conditioning. It's pretty similar.
Yeah, similar.
If you don't care about going to the beach.
Oh, maybe I'm wrong about this, Johnny. Wait, did you read the article?
No, but I know
because it's saying here. Let me read the sentence. Maybe I got this wrong.
I know there's a pretty good exodus from California to Nevada.
While most new residents in Las Vegas hail from California and come in search of a friendlier financial environment, about 5% of the new residents who arrived from out of state came from Florida. So you're right. We're the second largest group of people. So thank you for correcting me on that. Even though you didn't read the article, you knew more than me. So I thought that was kind of interesting. I was like, why are people moving to Vegas? And there was a whole bunch of stuff involved. #1, their tax situation's really good out there. Okay.
Like income tax or property tax? There's no state income tax in
I don't think
Nevada, right?
No, it's just like Florida, right? So that's one of the good reasons about moving to Florida is the income tax. So that's a really big thing.
The tax is called gambling.
They're take state. Yeah,
exactly.
But that's a voluntary one. That's voluntary.
Yeah.
Gambling.
Yeah.
But there were a lot of lifestyle issues too, and that's what I thought was interesting. They're saying that a lot of Floridians, the type of homes that they live in here for single family homes are very similar. And it's true because I've been out there and looked at real estate out there. The homes look a lot like Florida, like the newer construction homes.
Yeah, like gated community style homes.
McMansion.
Yeah, you'll see that.
The McMansions with the suburbs and the gated communities and all that. And you're like Robert Downey Jr. when he was partying too hard and he didn't know which house he lived in and would walk into somebody else's house because they all looked the same.
They look the same.
All the driveways. I remember doing that over in Wellington for about a year. The first year I moved into my McMansion, I pulled in the wrong driveway every day for like 4 months. And I'm like, I'm off by one house.
Friend of mine would just, when he first moved here from Miami, he would just push the garage door opener down the street to see which one opened.
Just which one was it?
Well, sometimes you open up the wrong garage door anyway because of the code's the same. But so anyway, I just thought it was kind of interesting that a lot of people feel like if Florida isn't their cup of tea, that they're moving to Vegas, because I just feel like, desert versus beach, we have water, they don't have water.
Yeah, they're very, very different.
You got those clear lakes though, right? Those lakes are
I'm sure.
Well, they used to. They used to until everything, because of the drought, they don't have any water over there anymore. All they got is if you go fishing, you pick up dead bodies now.
So
I heard those are good.
No state income tax, warm climate, if you could say warm, maybe hot climate.
Yep.
Similar style homes for the money.
Mm-hmm.
You do have the strip.
Yep, you have all the entertainment and stuff out there.
Yeah.
And a lot of people 55 and over are moving out there. It isn't a lot of younger people. It's more older people moving out there, retiring out into that area in the suburbs. So
it's a dry heat, John.
Yes, it is.
Yeah.
Very dry.
So
very dry.
I've always
Dry cold too.
I've always liked Vegas. Every time I've gone to Vegas, I always extend my vacation, no matter how long I book. I always extend my vacation by a couple of days. I'm changing flights and calling up hotel. Can you give me an extra couple of days?
Nice,
because I don't
somebody's
get out.
not losing his ass out.
He's
there.
on a heater.
Well,
Yeah.
I usually go there. Well, I have a certain amount to lose when I go there, so I don't plan on making money. I just bring entertainment money, and however that's
What's your game? Blackjack?
Yeah, blackjack. I love blackjack. That's
Johnny
my thing.
prefers the guess how many how many fingers am I holding up?
Yeah, war is fun.
Yeah.
yeah, exactly. And of course, poker. I play poker a little bit, but I haven't played in so long, and I don't play down here. I don't go to play blackjack or poker down here much. Once in a while, I'll play poker, but blackjack, I don't, because I like it too much.
Yeah, you're gonna get
and
stuck
I'm
over there.
gonna get the bug, and I'm just gonna do it. So
I
I only do it for vacation.
I haven't been to the kennel club in a while, but when I
Me
go,
neither.
Tiffany will tell you, it's like I'll go on Friday. They're open all weekend, right? So I'll go on Friday. I'll come home Saturday sometime. I'm just playing poker all night.
Yeah, me too. I'll do that too.
Yeah.
I can have 12, 14-hour sessions. It's no problem.
Yeah.
I remember the last time I was Vegas, I was sitting down playing poker for a very long time. And then the next thing I know is the person I came with came downstairs and was like, "What are you doing still playing?" They were totally freaked out because they thought I lost all this money. I wasn't losing anything. I wasn't really winning a lot.
Tim's like,
I was just
I'm
gonna
up.
stay in.
Then he did the hourly. He's like, I made $8 an hour.
Yeah.
Right?
Well, what they told me was, yeah, exactly. And what they told me was, it's like, "Hey, we got to get to the plane. We got to get to the airport." And I'm like, "I'll be upstairs in a little bit." And she's like, "It's sunshine outside. We have to leave in an hour.
Yeah.
We're leaving, the plane's leaving in an hour." I'm like, holy crap.
Jim's like, I'll go to bed.
So-
I'll be up for bed in a little bit. Why not?
So so I enjoy Vegas too. I don't think I'd ever want to live there. I really love living here in Florida, so I'm joking about I'm moving to Vegas.
Never lived there.
But I came very close to buying one of those condo hotels during the boom. I'm so glad I didn't do that. That would have been that wouldn't have been a good deal. I thought it would be great to have a little place where I didn't have to get, worry about a hotel, and I'd be on the strip, and then I could rent it out all the time. But that would have been a bad deal if I had done that investment, because I was thinking about that like in 2004 during like boomy time.
Yeah.
And by 2008, that place was a ghost town for a while. So,
Yeah, because they got crushed and then
Yeah, they
built
got
back
crushed.
nice,
Oh.
and then it's interesting.
Yeah. So the other thing is about Vegas, it's cheaper, right? So they said for the luxury market, like top on the luxury market over there is about $1,000 a square foot for luxury homes, where Florida is more traditionally closer to $2,000 a square foot for luxury. So that's another one, is that you can get the same type of house way cheaper in Vegas.
Oh.
Okay. So anyway, that's the deal with I'm moving to Vegas. So I'm really not, but it's kind of interesting. So Ross, I want to switch over while we have a little bit of time left. I wanted to talk about condos, townhomes, and single family, and what kind of insurance does my unit require, like the place I'm buying. Now, last week we talked about a guy who we were told was we were buying a house. It was a townhome for sure, right? We checked it out. And the owner told us that the house, or the buyer seller side told us that the house had just had the roof replaced by the HOA. So we went. So if that's true, if the HOA covers the roof, what kind of insurance would you need in a townhome for that?
I mean, if you just asked me that conversation, I would say, I think you need an HO6.
Right, which mean, and an HO6 is where you have insurance, but you're not covered.
So the association has a master policy that covers the exterior, and then you're only responsible for the interior of your unit.
Right.
As far as the property damage goes.
And that's an HO6. And then the HO3
is like a single family house where you're responsible for the entire structure, including the roof.
So almost all condos are HO6, right?
All your kind of apartment style condos are going to be an HO6.
Right. Okay. So what happened was we thought we needed an HO6 because they said that the roof was taken care of by the community.
If it's listed as a condo on the property appraiser, like Mike was saying, it's going to be an HO6.
Right. So, well, this one was a townhome, right? So, but we still thought it was HO6 because of the fact that they were taking care of the exterior. We heard that the exterior and the roof was taken care of by the community. and they had just replaced the roof, they said. Then we found out that the roof really wasn't replaced just recently, it was repaired. And then we found out that this is how it worked. And we went over this for like 3 days for our customer because it was a big deal. Because now we didn't have a new roof. And we put an offer in based on a brand new roof on the house. Now we found out the roof was 2009. Okay, so that's a big difference between new roof, okay? And what we found out is that all the homeowners are responsible for the roof. So if there was a fire or a hurricane, they have to have that covered by their insurance policy, the homeowner's insurance policy. But the community is responsible in the HOA docs to maintain the roofs. So from time to time, with no regular time period, the community is going to inspect everybody's roofs. And if there's any repairs or replacement that need to be done during that time, the HOA pays for it.
So that's anything that's not insurance related, not some sort of insurance claim, they're responsible for.
Right. And then what happens is that, let's say they need to repair Joe's roof, and Mary's roof needs to be replaced. And Steve's roof, they have to replace a couple of tiles, and John's, they're replacing some rotted fascia. Okay. They're going to pull all that money together as a community, make all the repairs, and then divide it by the amount of units and make it evenly divided to everybody. So I said, wait a second. So if my guy replaces his roof because he needs to replace the roof, let's say, or he has a hurricane damage and his roof was replaced by the hurricane, and then a year later, he has a brand new roof. You do your inspection for the community, and we find out that 3 other people haven't replaced the roofs yet. And now everybody in the community is going to help pay for those roofs, but my guy, he had to deal with his own roof by himself. And they're like, yeah, that's the way this community works. I never heard of that before. Have you heard that, Ross?
I mean, I don't really pay attention to what's going on, how HOAs work. You know, we're just, concerned about who's insuring what and making sure that we get the right policy. But I mean, a lot of the times, on those connected units, if one guy has damage, you got to replace the whole roof. So a lot of the times I'll try and work with the other unit owners and say, hey, I'm doing all this,
Yeah.
That's the only reason why. Go ahead, Mike.
I was going to say the kink for us, like in our world, it's important because the amount that you pay for insurance not only affects how much cash you need to close, but also your monthly payment. And so if you go into it anticipating that it's going to be an HO6 or an interior only policy, that policy is cheaper than the full policy.
Typically, yeah.
And so it can switch up, like, do you qualify or not? So it's pretty important. And we're looking for those clues, Jim. Like the listing, you can usually tell by a combination of how much is the HOA fee, and does the listing agent put that they have maintenance exterior? That's the word you're looking for in association dues cover. And if you see maintenance exterior, your brain triggers, okay, they have a master policy that covers the exterior of the home. But in this case, they just cover the maintenance of the home, but they don't insure the home. So it was a little bit of a monkey wrench for us, but
we got it all worked out. So then we were going to bind the wrong type of insurance policy. So then we had to go back and ask Ross what to do. So we had a guy come out that Ross recommended to do that roof certification to figure it out. And we found out that there was 9 to 10 years useful life. So now we felt comfortable that the roof isn't going to have to be replaced right away, even though it's 2009. I thought it was a new roof when I drove by, because the first thing I do when I pull up to a house, any house, I'm looking at the roof right away. That's the first thing, right? And that one to me looked like a newer roof. And I was like, wow. And I was thinking, this maintenance requirement that they go out and check, it might not be a bad thing, because I've had other owners before, Ross, like you're talking. Let's say you have a triplex and that one of the units, they have to replace the roof, but the other 2 units, they don't want to do it. But the first one has to.
And it's like a shared roof. Like it's all the same level. There's no elevation changes. Yeah.
So this stops those fights from happening, because sometimes, like, especially, I remember there's a place in Royal Palm with these townhomes and they have flat roofs, right? They're the mansard roofs with the flat, and there's quadruplexes in there.
4 people under that one square.
And one of the units is being demanded to replace the roof by their insurance company. The other 3 are saying, nah, I don't want to. And it becomes very, very difficult for that homeowner to do stuff, because if they fix their part of the roof, then the runoff goes to the other units and it can damage their roofs or create leaks on the other sides that didn't replace, and then they come after you like you're causing the problem. But it's because they don't have a superior roof.
Well, I think if anything, like you get that letter from your insurer says, hey, you got to replace your roof. In this day and age, you got to talk to Ross and say, hey, do I really got to do this or do I have other options?
Yeah.
Right.
Yeah. That's, Ross's nickname for a long time has been Hot Ross over here, but now it's got to be, you got to call Ross, right? You just got to, if you got questions on your insurance or your roof specifically, you got to call Ross, right? Because Ross is going to figure it out and get you the best deal on that. And we're so lucky to have you here, Ross. So thank you so much for being part of this team for 10 years. It's
awesome. I love helping everybody and working with all you guys.
Yeah.
We always love to emphasize people, they go, oh, Brightway. No, Brightway Insurance, Juno Beach. Go to FloridaTalkRealEstate.com. Make sure you're getting connected to the best of the best. It's Ross Komarinetz and his team with Brightway Insurance, Juno Beach, FloridaTalkRealEstate.com, or call 888-973-7028. Juno it.
I mean, it's not called Hot Ross for nothing either. So you get that. That's an added benefit.
True.
Yeah.
So, I'm actually for the first
Ross.
I needed that, Jimmy. Thank you. I needed that right now because I'm punting here for a little bit.
You're punting?
I am, because for the first time I ran out of show prep in a long time.
No, you
I
didn't. We skipped through it. There's like
what did I
10
skip?
things you
What did
didn't
I
cover
skip?
on
I can't see what I skipped.
Oh no, I don't know. Let's
I
just
think we went to
Johnny,
everything.
Phil.
We can't ask for any calls. Wow, this is the first time in like 8 years, I think, that we've had this problem. So
I'll say go back to that, the insurance or HOA question that we were talking. It drives me nuts when you call the listing agent and you say, hey, does the association cover the exterior? And say, I don't know.
Yeah.
Yeah.
Well, that's the other thing, like on the condo thing. So
gotta
you're a little bit beholden to what the listing agent fills out when they're putting the listing together. So is it a condo, a townhome, a villa? Does the HOA cover? And so you have to get a trained eye to look for these clues. Like if I see an HOA fee that's $100, $150, right away I'm thinking, okay, they're not covering insurance. This is way too cheap to cover the master insurance policy. But on this one, we saw, I think it was like $250 a month.
Mm-hmm.
So $250 a month, and the listing says maintenance exterior. It's like no brainer. Okay, yeah, master covers the exterior, and so then I start thinking, well, what is that? Hopefully they're not listing. What does the $250 cover, Johnny? What are they paying? What are they paying for with the HOA?
Yeah.
That's not a lot.
The maintenance, the actual maintenance. There we go.
Well, it was a good deal for Robert and David. That actually was we haven't closed yet. We're going to be closing in about a week or week and a half. But
oh, a beautiful home. I mean, ready, like turnkey, move in, ready.
Yeah. Now it needs the inspection went really well. The kitchen is a little dated. I'm being honest with people because this is your first time home buyers, right? So this is what you should expect in the market. It had a good roof. It had impact windows just recently replaced. The kitchen was a little dated, but everything in the inspection went on point. They did some significant work to the AC, which means the AC is going to be working great. They put in a new blower motor and stuff in there.
Nice.
So, and our buyer used to be an AC tech, so he's not afraid of ACs at all. He's like, I'm cool with the work that they did. So, congratulations to Robert and David for buying their very first home. And last year we put in a deal and the whole thing fell apart, and then he had to wait 9 months, and then we're getting the home now. So I'm really happy for him.
Yeah, that's awesome. First time home ownership is amazing. Congratulations. If you're like, yeah, you know what? I'm ready for that to be a reality. Or maybe you're looking to upsize or downsize or just acquire another property or everything in between. Maybe you're struggling with your property insurance. Maybe you're thinking, I need to get at some of this equity. I don't know if it's a good time with the rates. You got to go to Pros. Get the expertise that you're looking for. And the expertise comes with not only experience, but man, valuable information that can lead you to making great decisions for you and yours. Go to FloridaTalkRealEstate.com. Share that with people in your life because you never know who you could be absolutely helping out if you put them at FloridaTalkRealEstate.com, your one-stop real estate shop. Why? Because there's a team of pros. They are experts in their field. Over 11 years now we've been doing this radio show. And yeah, I get paid to come in on a Saturday, but it makes it real easy to support this team and say, this is the guys you need to use. This is the team that my family uses and will continue to use because they're the best of the best. It's FloridaTalkRealEstate.com on Facebook and YouTube. Ton of information to be had. Again, remember your one-stop real estate shop, FloridaTalkRealEstate.com. Jimmy D, have a great rest of your weekend, my friend.
Thank you, sir. Have a great weekend.
Always a pleasure. Mike Rauch, the mortgage guy from the mortgage firm, please have an awesome weekend.
Will do. Thanks, everybody.
And Ross Komarinetz, Brightway Insurance, Juno Beach. Hope you have a great weekend.
Thank you. I will do my best.
And of course, Jimmy D running things over with the Florida Home Pros team, Keller Williams Innovations. That's not the whole team. You got a bunch of other pros. You find them all at FloridaTalkRealEstate.com. Jimothy, thanks for being with us every Saturday.
Thank you, gentlemen. Have a great rest of your weekend, and we'll talk to you next week.
You want to stick around and hang out with Greek and Joe?
I think I will.
All right. Locker room's coming up next. Jimothy's going to hang out. Greek and Joe, why don't you as well? Hang out. Locker room's next. We'll see you next Saturday. Florida Talk Real Estate right here.